Hey traders, Raghee here, and in this free video we're going to tackle the big question that we've been discussing in the chat room, and that is essentially and most accurately described as now what, right? Now what? So this is almost like a tie ball game again, right? We've sold off dramatically and took it all back, and we basically come back to a state where the market asks themselves a couple simple questions. Do we think that the worst of the Chinese devaluation is behind us? Yesterday's China fix wasn't as bad as expected. Do we think that the escalation of the trade war, the worst of it? Well, we're still waiting to see if maybe the administration changed their mind. What's going to be on that list? Does that September 1st tariff increase go into effect? I mean, there's still a lot of unknowns and still a large part of the month of August to go. We already know sort of the worst case scenario about the tariffs, but could some of that be walked back? Sure. So what's the third big unknown? What's the third big question? The third big question is, can this market go higher, right? That's what everyone's asking me, and I totally get it. So today marks what I call sort of a retracement to the scene of the crime, if you will, right? The scene of the downtrend. Got right back to that level. Is there anything that the market could look at to be more optimistic? And this is what I told our members. Was today's rally triggered by comments from Jay Powell, the FOMC, or say Williams, or some sort of rate sensitive comments, soundbite, interview, whatever? Was a rate conversation behind this? Like, in other words, confirmation from a decision maker at the Fed? No, we don't have any of that. So we still have that sort of waiting in the wings. It wasn't like today we got a 25 basis point surprise cut. We're still expecting anywhere from 25 to 50 basis points in September. So mostly 25, by the way. The world is getting more accommodative, right? Everyone else is starting to, I say everyone else, many G7 and G10 countries are starting to cut rates. We can see that this is like a domino effect across different central banks globally. The idea is twofold here. One, we are in distribution, which means this area up here and this area down here, so look at the previous lows, is overbought and oversold. This is oversold, this is overbought. So we're in a large distribution market. Chop. The second part is there's still some more distance to close to get to this overbought level. The risk is we don't have the buying support and momentum, and we sink back down into the lower half of the range. That's a very real consideration. But if we don't have everything that the market could rally on, namely at this point, the Federal Reserve, I still think there's a chance we close this space, maybe up to the point of control, maybe even to the value area high, the recent value area high. Could we close that distance and then run into resistance? And that's the gamble. I mean, we are traders. There is a lot of, there is an element of the unknown we have to embrace. So to reduce the element of the unknown today, we basically cut off underperformers. If there's a position we have, say, 4 contracts in and we can get at it unchanged, we might, whittle down to just 2. We can reduce our exposure, get flat in certain underperforming names, etc. That's certainly a decision and an opportunity that we have at our disposal today. Not panicking with the sell-off, but realizing that this kind of move, this sort of scene of the crime retracement, is not unusual. And it is a resistance level. And the next one up is there. So am I making a bit of a bet that we can continue higher because we haven't sort of exhausted the Fed reason for the move higher? That's my justification. And in the bigger picture, we are looking at an overbought, oversold market. And until I get up to about a +2, in this case, V-score level, I still think we have a little bit more that we can go to move up off the 0, off the mean, through 1 and to a +2. So I still think there is some upside to be had. And that's how I'm operating going into tomorrow. Big picture, look, we'll talk about this in the premium video, but macro always is the hard truth. And as long as the Fed keeps us from looking at the hard truth, the macro environment, which is quite negative, I do believe into next year we start to see the recession talk intensify, even into later this year. But for right now, for the next few weeks, or at least between now and the next meeting, we can avoid that hard truth because the Fed's going to let us. Okay? So think about that. I know it's an odd juxtaposition, but it really isn't. It's a short-term analysis or short-term look versus a longer-term look. Longer term, I am bearish. Shorter term, I think we can still move higher. I'll see you in the next update.